Audit and Assurance. My name is Dr. Joshua Aura. I teach at RCM College, and I'm the managing partner at Aura and Co, which is a certified public accountants firm offering advisory services, taxation services, and assurance services. We are based, that's the audit firm, at Westlands, Haven Court. Haven Court, if you come over there, you will be able to get us there. And that is why today I would want to take a few minutes just to discuss about our own experiences in audit and assurance, and why I would want all my students to join audit and assurance sector. Yeah, after you finish, let me just blur my background because I can see there is some bad light. Still, it's there, but we should overcome. So after you finish, auditing and assurance is the very best area for you guys to be able to get lots of exposure. Auditing will really expose you to so many great things in finance, to very many great things in terms of governance, many things that you'll be able to know in terms of various business models. So you get, like, for example, you're auditing hotels, some of the biggest hotels in Mombasa, we are their auditors. I mean, I've never run a hotel before, but given the auditing experience that I've gotten from auditing a hotel, if I'm given a hotel today to run, I'm so 100% sure that it shall be able to succeed. Yeah, because I know the loopholes. I know, for example, stores management. All right. I know how employees can mess you up if you don't work towards empowering them, towards motivating them. Many great things. So then today I would want us to start right away by looking at assurance, and I would want to hear from you guys. Whenever you hear this word assurance, what comes to your mind? Whenever you hear the word assurance, what comes to your mind? I'm assured. Assurance. Do not hesitate, ladies and gentlemen. Just give me your own interpretation. How do you understand the word assurance, especially as regards to audit? As regards to audit, how do you appreciate this word assurance, to assure somebody? I'm so sure the proper answer will be coming. Now, ladies and gentlemen, remember that an auditor is an independent examiner. Whenever we talk about auditing, you may forget about every other thing, but you shall never forget that an auditor is an independent practitioner who is hired by some parties. It could be the company's shareholders. Like most of the times, ladies and gentlemen, 99.9%, Aura and the company, which is a firm of auditors, we are normally hired by shareholders of companies. This, for example, could be, if it's a circle, the members, the contributors, all right? These contributors will be putting in their contributions, right, in form of deposits and share capital, for example. After they build up their contributions, they are able, ladies and gentlemen, to come and borrow, right? But you see, at the end of the day, these people, if they have come, like if it's Mwasibu Sacco, which now has over 10,000 members, this Mwasibu Sacco cannot, confirmation, I love that. Mwasibu Sacco, the members cannot, 10,000 of them, cannot stay in Nairobi here at ABSA building to manage the Sacco. That management will be chaotic. It's not possible. So they must, in this case, sit down in an AGM, and then they appoint a team of a few individuals to manage the organization in the name of what here? Directors. So perhaps they could hire like 10 directors. Now, ladies and gentlemen, please listen. These are 10 directors who have been brought to manage like 30, 40 billion. Of course, I'm exaggerating, I'm just putting high figures there for you to see the bigger picture. They've been brought to manage like assets worth 40 billion. Now, what do you know, my good students, about human nature? Most human beings, we are greedy. Not most, but all of us, we are greedy. We prefer very big things. We always love, if it's a vehicle, trust you me, out of these 34 students who are here, if opportunity was to fall on our way, we would rather drive, in this case here, for example, the top range V8s, all right? And that is how life it is. It's about greediness, all right? We always love it when we are on top there. So if you are not careful, these 10 people who have been hired to manage this circle, they can easily misappropriate those assets and of course convert them to personal assets. So in most cases, the members who have gone back home, who are very, very many, leaving behind these 10 fellas here to manage this business for them, they'll always be doubting these directors. Wherever they are, they'll always be saying that these directors are here to steal our assets, to steal our cash. And that is why now these members, I could call them shareholders, owners of shares, these shareholders now, they would want some kind of a comfort, which would be offered by an independent practitioner. They would want some form of assurance, a comfort that the financial statements prepared by these directors can be relied upon. And ladies and gentlemen, that is why anytime we talk about an auditor, and you're told in this case here to define who an auditor is an independent practitioner who is hired to come and give an opinion as to whether financial statements of a company prepared by the management of that company, do they portray a true and a fair view? So basically, he's coming to confirm. He's coming to confirm. Somebody told us there that assurance is about confirming, right? To come and see whether those managers, have they produced, in this case here, proper financial statements. And if they have produced proper financial statements, or otherwise, this person called an independent practitioner will be able to come and put in his stamp, Aura and Co. Once he puts in that stamp of his, and he has said that these financial statements are okay, so the users of the financial statements, including these shareholders, now they will have more faith in those financial statements because of the endorsement given by a third party who is really professional and independent. Very professional and independent. Now, ladies and gentlemen, then when we talk of this assurance and engagement, we must know from the word go, from the word go. And I'll be able to share with you this ACCA book. It's a very, very good book, ladies and gentlemen. From the word go, you need to appreciate what we call, just a minute. Yeah, so in this chapter, basically, which I'm doing, and I'm only doing chapter 1 today, we shall be able to look at elements of an assurance and engagement. We shall be able to look at what we call reasonable and limited assurance, accountability, stewardship, and agency, right? Benefits and limitations of an audit. We shall be able to look at this within 20 minutes. All of us should be out of this place. Within 20 minutes, all of us should be out of this place. Now, ladies and gentlemen, we are saying here elements of an assurance engagement. The purpose of assurance is to increase the confidence. The purpose of assurance is to increase the confidence of the user in the subject matter being relied upon. Ladies and gentlemen, if, for example, today I wanted to invest in shares of breweries, East African breweries, then I must go to EABL's audit opinion. See what is the auditor saying there. If the auditor says this is good, then I will be able to have my confidence high up there. Confidence on what has been said about this company. All right. So whenever we talk about elements of an assurance engagement, we must always think about three-party involvement. There are always three parties involved. Number one, we have the auditor, like ourselves, Aura and 𝐂𝐈𝐅𝐀, the practitioner, e.g. the auditor, who is going to perform an independent examination of the subject matter against suitable criteria and provides a written assurance report. Then we have the intended user, the people who hired us. In this particular case, the shareholders. These are the users of the subject matter. These are the users of the financial statements. And then now we have the party that prepares these financial statements. The responsible party, e.g. directors, preparers of the subject what here? Of the subject matter. Yeah. So anytime you hear about any assurance engagement cannot be a staff of only two parties that we have, for example, the auditor and the directors. No, it is normally tripartite, three parties, three. What these parties, you don't have to call them like the names are using there, like practitioner. It is the auditor, ladies and gentlemen. It is the users of these financial statements. That is the shareholders. And then, of course, we have the preparers of the financial statements. Whose duty is it to prepare financial statements? It is always the director's duty. So the preparers, in this case here, must be there. And remember, us in this case here, we are coming in as agents of the shareholders. It is the shareholders who have hired us. We are coming to gun the directors to see whether these directors are doing the right job or not. To see whether these guys are doing the right job or not. So up to here, my good students, are you able to follow Mwalimu? Up to here, are you able to follow Mwalimu? Could you kindly? Great. Thank you so much. Thank you so much. Ladies and gentlemen, I will be able to continue. Then we have the subject matter. The subject matter to us in terms of audit, it is the financial statements that we're going to audit. So the information being examined, the financial what here, the financial statements. Then we have the suitable criteria. Ladies and gentlemen, you see, as auditors, we are being guided. I'm coming to audit financial statements. These financial statements that I'm coming to audit are never prepared in a vacuum. They're normally prepared well within some framework. And that framework is the one that we're going to audit financial statements against. So have they adhered to this particular IFRS when they were preparing these financial statements? When they were computing inventory, for example, did they observe that inventories can only be measured either at cost or net realizable value, whichever is lower? So, ladies and gentlemen, as an auditor, when I come to take up these financial statements here to audit, first of all, I must know that those financial statements ought to have been prepared in accordance to some acceptable framework. Like ourselves as Aura and company, because we only audit in East Africa, IFRS, International Financial Reporting Standards, is the framework that we shall be using, All right. So we have here suitable criteria. And then now next, ladies and gentlemen, we don't just make our opinions anyhowly, haphazardly. No, there must be sufficient and appropriate evidence. Sufficient and appropriate evidence. Now, ladies and gentlemen, please listen and listen to me very well. If, for example, we were to go to a company, we start auditing a company, like which company? Like Safaricom. And I really believe that one day, when I'm still as strong as I am, Aura and the company will as well be auditing these great big companies. Yeah, it can't be just a preserve of the big four. We have the capacity to do an audit of these big companies, yes, the blue chip companies. Now, if, for example, it is Safaricom, you see now I'm coming to give an opinion as to whether the financial statements prepared are prepared appropriately. So then they'll be able to give me financial statements. I pick the income statement. When I pick the income statement, the rules, what we call international standards on auditing, ISAs, need auditors to be very skeptical. When they tell you that sales was supposed to be 10 billion and they're telling you that that figure is correct, you shall never take it just like that, or rather, take it with some pinch of salt. Some pinch of salt. So in that case, then what do you do, ladies and gentlemen? Once in this case here, you start doubting, then automatically you have started becoming a good auditor. So you are doubting. So when you doubt, what do? You shall start collecting evidence. You shall start, in this case here, collecting what here? Collecting evidence. You shall start collecting evidence. When you collect evidence to support this, for example, sales figure, just get a few, ladies and gentlemen, for example, invoices, right? So pick a few invoices. Of course, our work, we normally do our work through sampling. We don't do like a census, like counting the whole population. No. So I'll pick a few invoices to support the sales. I'll be able to trace this, for example, to the bank statement. Was this money received? All right. There are a few things that I will be able to check, which I'll be able to explain to you as we get along. All right. So it will be very, very important for you to know that if it is an event that I'm going to give assurances, right? I'm not just going to pick financial statement, then I put our stamp of 𝐂𝐈𝐅𝐀 and core, and then we say straight away that, hey, we are saying that these financial statements are okay. No, our opinion is always evidence-based. I must dig deeper and deeper to get more and more evidence, to get more and more evidence. And ladies and gentlemen, there must be written assurance report where we express a conclusion or an opinion, where we conclude and say whether the financial statements in this case here portray a true and fair view. A true and a fair view. So ladies and gentlemen, you may forget about everything else. If you look at your past papers, you'll be able to see in many questions, not one, not two, where the examiner is asking for these elements of an assurance engagement. You may forget about everything, but don't forget that first of all, there are three parties involved. There must be a subject matter that is being examined. There must be a suitable criteria, which is the IFRS. There must be sufficient and appropriate evidence. When we continue, I will be able to tell you the difference between sufficiency and appropriateness. You see, sufficiency is about quantity. Even if I've just told you that we are going to pick a sample, we need maduong, something, because we want to rely on this to be able to provide. So sufficiency is about quantity and appropriateness is about quality. Quality. And then, ladies and gentlemen, we have at the end of the day, there is a written assurance report, written opinion. There is a written opinion like that. Now, ladies and gentlemen, please listen and listen and listen to me very well. I would want us to search for EABL integrated report, EABL integrated report. Yeah, you'll be able to see it right away. Yeah, it's coming up. Auditing is a very, very good subject. It's a subject that you shall never fail. A subject that you cannot fail. Even if you do it with your eyes closed, it's a subject that you can regurgitate most of the things offhand, really. Really. All right, it's opening up. Just be a little bit patient. There is something, because I like showing people practical things, because at the end of the day, you guys are going to become auditors. Yeah, you're going to become auditors. Yeah. So here you can see we have what we call an integrated report of EABL, integrated report. We call it integrated report. To integrate is to put together. So you talk of integrated report. This is a report that follows what we call F, E, S, and G. They've been able to put four things together. F for financial statements, E for environment. So they have an environmental report. S for social. Remember, a company is supposed to be a social animal. So we expect you to talk about CSRs. How good are you as a corporate citizen here? And then lastly, we have the concept of governance. So as an auditor, when I come to audit, I'm not only auditing financial statements, but I'm auditing the whole integrated report. To integrate is to put together. And in that case, you are looking at FESG. I'll be able to give you more information about that. Now, ladies and gentlemen, please listen, and please listen to me very well. So we have our integrated report there. So you can see they are telling us 100 years old, 100 years bold from 1922. So these are 2022. Cheers to our next 100 years. All right. So what I'm interested in, ladies and gentlemen, is not about all this. I just want to get their auditors here. I know their auditors, not unless they have changed. Their auditors are PwC. Yeah. Oh, I want the auditor's report. No, I know what I will do. No problem. I just want you to see how the auditor's report look like, because we are no longer teaching just people theoretically. No, we want when you go to interviews, you should be able to shine. When you go to interviews, you should be able to shine. People should be able to know that you are well prepared. You are a student who studied at RCM. Yeah, so table of contents. Yeah, report of the independent auditor, page number 129. You see the word independent is coming here. You can see PwC here. Independent auditor's report to the shareholders of East African Breweries PLC. Yeah, I can see charts. Okay. Such a big report. Great questions. Yeah, I have a chief ninja who is assisting me. Remember, it's not the whole document, which is belonging to the auditors. The auditors only have a very small section. Rarely will our report be like 3 pages. Our report, out of all these, you can see, if you look at out of all these pages, you can see the auditor will only be taking like how many pages? And remember, this is really, really a very, very big company. In most cases, our auditor's report is just a page, just a page, just a page. Yeah. So these are like 5 pages. You can see here, signed. Yeah. After that, then you will not be able to see. You will not be able to see after that. You will not be able to see. You will not be able to see. You won't be able to see. You won't be able to see any work of the auditor. So ours is really, really tiny. So I just wanted you to see the independent auditor's report, how it looks like, right? How it looks like. So independent auditor's report to the shareholders of EABL. Our opinion. We have audited, you start with the opinion up there. We have audited the accompanying financial statements of East African Breweries Limited, the company, and all its subsidiaries together, the group, set out on pages 134 to pages 200, which comprise the consolidated statement of financial position. You must always state what you've been able to investigate, what you've been able to audit. The consolidated statement of financial position as at 30th June 2022, and the consolidated statement of profit or loss, consolidated statement of comprehensive incomes, consolidated statement of changes in equity, and the consolidated statement of cash flows for the year, then ended together with the company statement of financial position as at this, and the company statement of profit or loss, and other comprehensive income, changes in equity, and the cash flows for the year then ended, and the notes to the financial statements, which include significant accounting policies and other explanatory information. Ladies and gentlemen, that should not confuse you. What you're saying is that you as an auditor, there are those things that you went looking for. There are those things that you went, in this case here, to audit. You went to audit financial statements. And the financial statements basically are 5 types. The first one is what we call the income statement. Yeah, income statement, that is number 1. Number 2, we have statement of financial position. Number 3, we have statement of changes in equity. Number 4, we have the cash flow. And then number 5, we have the notes. So as an auditor, you must look at all those notes, the financial statements. So basically, that is what this report is starting by telling us, that we as the auditors have been able to audit those financial statements. This being a group, we have audited the 5 financial statements for the group and the 5 financial statements for the parent company, what they are calling the company. All right, together with what here? Their notes. Great. And then what are we saying, ladies and gentlemen, here? If you continue reading, we are told here, in our opinion, in their opinion, that is PwC, in our opinion, the financial statements give a true and a fair view of the financial position of the group and the company as at 30th June 2022, and of its financial performance and its cash flows for the year ended in accordance with International Financial Reporting Standards and the requirements of the Companies Act 2015. So you can see here, they're putting down the framework. And then they're going ahead to give us the basis for the opinion, because you can't just give us a good opinion, because when they say that the financial statements give a true and a fair view, they have given us a good opinion. You can't just give us any opinion without giving us the basis for opinion. We conducted our audit in accordance with international standards on auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statement section of our report. We are independent of the company in accordance with International Code of Ethics for Professional Accountants, including International Independent Standards, issued by International Ethics Standards Board for Accountants, together with the ethical requirements that are relevant to our audit of the financial statements in Kenya. We have fulfilled our ethical responsibilities in accordance to 𝐂𝐈𝐅𝐀 code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. So the basis for our opinion, ladies and gentlemen, here we were able to do what here? To collect enough evidence, which is sufficient and appropriate at the same time. And of course, in this case, we are saying that we are a reputable firm of integrity that has been able to follow the entire code of ethics, and we have gone ahead in this case even to provide. And then we have what we call key audit matters, what we call KAM. We shall be discussing that. I simply wanted you to at least understand what an audit opinion is, high level. Yes, I'll be able to send it right now. Yes, this is what we call financials. All this basically fall under financials, those 5. Great. So let me save this document and then I share it here. Yeah, please feel free to ask questions. Feel free to make contributions. Remember, I'm your father in this industry. I want when you be coming for internship at Aura and company or any place you go, people should be able to recognize that you are taught well. All right. All right. Yeah. Of course, notes, a good student is asking, what do these notes? Yeah, we always provide notes here afterwards to the students who are in the paid group. Once you pay us fees, then we give you these highly summarized notes, which are really, really good, which are really, really, really good. So please confirm whether you've been able to see those financial statements. All right. So the report is there. The report is there. Now, ladies and gentlemen, somebody is asking about these notes. Yeah. You see, notes to the accounts, they will always be there. Yeah, where you explain. For example, if it's property, plant, and equipment, you have to tell people how did you arrive at the figure. Yeah. You must tell people how did you arrive at that figure. You see, like now this one here, note number 6, revenue from contracts with customers, note number 6. So if you come down after all the financial statements, if you come down after all the financial statements, yeah, you can now see all those notes here. They'll come under, in this case here, give you all the notes down here, basically explaining the bases, yeah, the policies, etc. So as an auditor, you also have to go through these policies to see whether they are in tandem with the figures. Now, ladies and gentlemen, whenever you get a job, let me tell you now the practical aspects of this job. Whenever you get a job to audit, this is normally what we do. So assuming that today you are to give Mwalimu a job, yeah, assuming that today you are to give Mwalimu a job. Just a minute, just a minute. Presenter. All right. So, yeah. So, this is a very, very important engagement. We call it an engagement letter. All right. So in this case, in the engagement letter, but first of all, before an engagement letter, I have to explain something. There must be something I must explain here. Yeah, the course outline. Then, Collins, you are wrong. You know, Collins, me, I'm not even teaching audit and assurance. No. I'm taking you through the practical aspects of audit and assurance because I run an audit firm, eh? Yeah. Today, I'm not here to teach audit and assurance to give you like a course outline. No, no, no. So I hope you are here because you want to know what happens in the audit. Maybe there was wrong communication, right? Today, there is not even a course called audit and assurance in your timetable. No, no. So ladies and gentlemen, listen. If I get a job today with a ABC Company Limited, normally what I will do, I will observe what we call etiquette. I must get to know why was the previous auditors, the outgoing auditors, why were they fired? So the directors of this company will tell me, for example, they were fired because of this and this. Immediately they finish giving me their side of the story, I must seek for permission to talk to the outgoing auditors. Yeah, so Aura and the company is still good, yeah. So Aura and the company would want to know why these outgoing auditors are going. There are no good auditors who leave good companies. There must be an issue. So in this case, we shall be able to do what we call ethical clearance. Once we are finished with that ethical clearance, those auditors, for example, tell us, hey, you guys, we give you our blessings. Please take up the job. Please take up the job. We give you our blessings. Take up the job. So then when I accept to take up the job, I shall draw what we call an engagement letter. So the letter, of course, is now engaging us. It's a contract between now ourselves and the company. All right. So in this engagement letter, we shall be able to say so many things. But the most important thing, ladies and gentlemen, that you're supposed to be telling this particular client of yours is the responsibility of the directors. That is where we have always realized that most managers, most directors will always have a problem with. Because most directors will always think that when this auditor comes here, he's coming to do so many other things other than just auditing financial statements. Most of them will think that in this case here, this guy has charged us 300,000 for a job of say 2 weeks or even 3 weeks. Why? That he should have come and also helped us tackle all our tax matters, tackle this, even make financial statements for us. So we must define our respective responsibilities. All right. We must define our respective responsibilities. So we must come here and define our respective responsibilities, ladies and gentlemen. So our respective responsibilities, for example, you're saying, dear directors here, engagement letter for the provision of audit of the year ended 31st December, that is last year. We are writing this letter to confirm the terms of our appointment as auditors of so, and of course, we have rubbed the names of this client, so it may not flow very well. That we are aware of the responsibilities we have and of the areas in which the management will retain whatever. This may not make sense. These guys, I told them to edit, to remove whatever, but they never did a very good job. But basically, this engagement letter, ladies and gentlemen, you're writing will be able to detail what we shall do as auditors. We shall be able to specify there that our main role as auditors is to give an opinion. Issues to do with fraud and errors, yes, we shall look at them, but that is not our primary responsibility. To identify fraud and errors is secondary to us. The party that is primary to confirmations of fraud and the errors within the company is the role of who? The directors, not ourselves. It is in this engagement letter that, ladies and gentlemen, we shall be able, ladies and gentlemen, we shall be able, for example, to say our fees. And then, of course, we shall be able to say that we don't make an opinion anyhowly. We normally depend on the evidence we collect. So we expect maximum cooperation from them. Otherwise, if they are not cooperative, then we shall be able to say that they have been able to, affect our scope, limit our scope of operations. And if you limit our scope of operations, then we shall issue what we call a disclaimer of opinion. But now, ladies and gentlemen, as we progress, because I can see I'm late, yeah, I only wanted to talk to you for about 30 minutes. Now, ladies and gentlemen, whenever you are doing this audit, you must always remember what we call internal control systems. And you must always remember what we call substantive tests. So whenever we talk of substantive tests, we always talk of R, A, E, O, U. R, A, E, O, U. R for analytical procedures, where we take financial statements like 3, 4, 5 years financial statements, we compute ratios, and then we observe trends. That's how I do the auditing here. We observe trends. If we are seeing sales is growing very, very fast and gross profit is not growing, then there is a problem. I'll be able to raise an audit query. That is R. So R stands for analytical procedures. R stands for analytical procedures. R stands for analytical who? Procedures, ratios, and a trend analysis. Thank you so much, Abba. Then we have A. As I'm getting evidence, A stands for inquiries. Inquiries and the third party, inquiries and the third party confirmations. Inquiries and third party confirmations like that. As I'm gathering evidence, ladies and gentlemen, first of all, I will start from internal places here. Yeah, so please, I can see your receivables are worth this much. Yes. So in this case here, what made your receivables, for example, increase? You keep on asking questions. Remember, audit is all about having a questioning mind. So those guys will tell you so much, so many things. Whenever they tell you verbally, then tell you to put that in writing. When they put in writing, written evidence is of more quality than verbal. Is of a higher quality than verbal. So when they write down, if it's an email, I'll be able to print, document this as what we call a working paper and inquiries. So that is internal. I would also do external. So I'll ask these guys, you are telling me your receivables were this much, not a problem. Give me a chance. I've seen there are some customers here who really owe you lots of money. Let me talk to them. Let me talk to them. So they give you a chance of doing receivable circularization. You'll be able to do what we call receivable circularization. Receivable circularization like that. Receivable circularization, where you circulate, right? Some pamphlets, yeah, some letters to these particular customers to confirm that for sure they owe our company this much. So it's called inquiries and third-party confirmations. Ladies and gentlemen, I would want to take this opportunity to welcome all of you officially to RCM Online College. You don't have to study physically with anybody. Ladies and gentlemen, you can, in this case here, pass by just studying line. Yeah, and when you come over here, you are coming to be taught by highly experienced teachers. Yeah, teachers in this case who have got industry practice. Because if you look at, for example, the AA that was tested last semester, it wasn't theoretical. It was everything about assume that you are the audit manager like this. So they wanted you to do things practically. And that is why you need to be taught by some of us. If you're interested in joining our classes, please call us. Our number is 0719 525 000. I repeat, 0719 525 000. Otherwise, this session, I can see you've loved it. I'll be able to finish it, but not today. I'll be able to tell you when. Would you want Mwalimu to continue with this session in the near future? Of course, if I give you a timetable, yes. Thank you so much. Be blessed and bye. Bye. Okay, Gladys, tomorrow, fine. Thank you. Bye. Bye.